Nilesh Jain, Centrum Broking, joining us this morning as well. Nilesh, very good morning to you and thanks for joining us this morning. What is your opinion based on yesterday's broad-based up move? Are you enthused based on the charts, and do you bet on this up move, or as some people are calling it, will it be a dead cat bounce?
Morning, Alex. Morning, everyone. Absolutely. So there are multiple triggers that are supporting the market and supporting the yesterday's move as well. Today, we have a weekly FN expiry for the Nifty. So we are expecting a short covering move to continue because we have seen a lot of call writers were active at 22,200, 22,300 and 20,500 as well. So after looking at today's flat to positive start, I think there will be another round of short covering move which will take Nifty towards 22,500 to 22,700. And we have already witnessed the markets were trading in extremely oversold territory. So this kind of a dead cat bounce or a pullback is very much in line with the expectation. It is important to see whether Nifty manages to sustain about 22,500 from here, because there is a gap area at 22,500 zone. So if that is taken off decisively, then next target in the Nifty would be somewhere around 23,000 to 23,200. So that is important level that we are keeping an eye on, at least from intraday point of view. The setup looks positive given the kind of outperformance that we have already witnessed in the Bank Nifty. So we are very much bullish in the Bank Nifty as well. And we expect Bank Nifty spot to move towards 49,000 to 49,500. Classic triple bottom kind of pattern can be seen on the daily time frame chart in the Bank Nifty spot levels. So overall setup in the banking space looks strong. On the back of that, we may see a follow-up move to continue, at least for today's trading session.
Okay, Nilesh, what are the top calls of the day? Can we get your stock picks on what is looking like will be an exciting morning?
Right, so a couple of buy ideas. First of all, OMC stocks are looking very attractive at current level, given the kind of rebound that we have seen back-to-back for the third straight session. We have seen a strong follow-up move in the stocks like BPCL, IOC and HPCL. So within the space, BPCL is something that is looking strong on the chart. So we are expecting a follow-up move to continue towards 267 to 270 on the upside. So these are the spot levels. One can keep a stop loss below 249 and BPCL can be bought. Apart from that, Cummins India is another stock that is looking very good at current level, given the kind of a base formation that we have seen. And it has already cleared its 50-day moving average and as well as 21 DMA. So looks strong on the chart for a follow-up move to continue towards 3,000 to 2910 to 3,000 kind of levels on the upside. So with a stop loss below 2830, Cummins India can also be bought.
Okay, it's an important one that Nilesh just mentioned, right? The trend on OMCs is very positive. Nirav Asher, come in here. There's been a rally though that has happened in OMCs already. At the current levels, are oil marketing companies giving you a good bang for the buck?
Well, yes, definitely. With the reduction in the crude oil prices, plus these oil marketing companies being good dividend plays also, I think they fit the bill as far as the investment objectives are concerned. And we particularly tend to like IOC and HPCL from the oil marketing pack.
Okay. All right. So, by the way, we'll get you more on OMCs. There's more to talk about. But before we do that, let's talk about PVR Inox, because there's an interesting note that has come from Kotak. It has upgraded the stock to buy, but it has cut its target price from 1,330 to 1,200. Mahima joining in to tell you what stands out. And Mahima, there was a spate in between of a lot of box office releases that were doing well. What is Kotak saying in his latest note?
Right, so, as you rightly mentioned, they've upgraded it to buy from an ad rating, but cut the target price to around 1,200 from 1,330. Now, what they're saying is that the correction for the stock is overdone. The stock has declined significantly in the past few months due to continued weakness in the box office collections, and the issues plaguing the Bollywood industry seem structural going forward as well. But an improvement in movie releases is likely to drive higher Hollywood collections in FY26, and this could drive growth for the company. PVR Inox's initiative on cost optimization and capital light expansion are also noteworthy, and they believe that the recent correction, as mentioned earlier as well, in the stock is overdone, which is why they're seeing an upside from now, from going forward. So these are the reasons as to why they've upgraded the stock, but they've cut the target price by a bit.
Okay. Okay. So, but it's an interesting conversation, right? Because the company has repeatedly stated that people are not going to shy away from the theatres, but at least anecdotal evidence seems to suggest that people are going less. I wonder what Nirav has to say about this. Nirav, I'm sure you've looked at the details far closer than I have, certainly. So, do you find merit in the arguments that Kotak is making?
Well, I think people may not shy away from the theatre, but definitely I think investors have shied away from the stock. So I think it's been a case of a perpetual wait for the investors, and I think finally we've lost faith in the stock. So I think we've stopped tracking the stock actually at this point of time. There are better bets. We've shifted to Saregama in this space, which looks far better and compelling.
Okay, Saregama in the space is looking compelling. But would it be, so therefore, okay, Nilesh, why don't you come in on this, right? PVR Inox, there is one bet that has been made. Nirav is saying that he's not really positive on this. Saregama is his pick. Why don't you comment on both of them?
Exactly, that's the same view even I have. So what Nirav has said is exactly technically is looking attractive. Saregama on the chart. PVR, it has gone into extremely oversold territory, so there could be possibility of a dead cat bounce in this particular stock. But the conviction is missing because the stock is constantly forming a low top and low bottom formation. The immediate hurdle is placed somewhere around 1030. So till the time it doesn't crosses above the same, we can expect another round of selling to continue in this particular counter. But yes, from current level, pullback cannot be ruled out. Saregama, on the other hand, we have seen a good consolidation in this particular stock. We haven't seen a correction. In fact, this stock has outperformed the market. And this consolidation, in fact, is giving a good opportunity to accumulate this particular stock. Positional target in this particular counter comes around 550 to 600. And from a short-term point of view, we may see the levels of 520 as well. Stop loss should be placed below 425. And yes, Saregama looks attractive compared to PVR Inox.
Okay. Nilesh, I want to come back to you because we've not spoken about individual banks, right? And your picks did not include any banks. Based on the latest move by the Reserve Bank of India, I'm just wondering whether some of the PSU banks, for example, that are still down despite yesterday's move on the month, or in fact on the year, would you buy any of these right now?
Absolutely, Alex. So I have one buy, that State Bank of India. And just to give you a disclaimer, we have already recommended this particular stock to our client as well. So yes, we are pretty much bullish on State Bank of India for upside target of 780 to 800. So little positional call in State Bank of India, and technically as well, we are expecting a follow-up move to continue towards 750 to 770 from a very short-term point of view. With a stop loss below 700, yes, State Bank of India will be our preferred bet within PSU banking space. And within private sector bank, Axis Bank is something that is showing strength on the chart compared to ICICI Bank and HDFC Bank. So Axis Bank can also be added at current level with a stop loss below 988, and upside may be seen towards 1050 to 1070.
You know, Nilesh, you mentioned OMCs as one of your picks, but if I were to ask you to choose between an HPCL, BPCL or an IOC, what would be your top OMC pick right now?
See, top bet would be BPCL, where we have already shared our levels. Apart from that, yes, IOC is also looking attractive. We have seen a good breakout coming in yesterday with a good volume participation as well. So we can expect a follow-up move in IOC as well towards the levels of 126 to 130 with a stop loss below 119. Yes, IOC can also be bought.
Okay, now talking about OMCs, let's have a bit of a deeper focus on it. Obviously, this is the background. Brent crude prices have dropped 17% from their 2025 highest levels. Let's go across to my colleague Somit on how Indian companies benefit from these lower crude prices on various industries and what will be the exact impact. Let's start with the impact on India first of all, Somit.
Well, if you look at Brent crude, yesterday at the lowest point of around $68.3 per barrel, which is the lowest price that we have seen since December 2021. Now, crude has been down for the second consecutive month. In fact, in the month of Feb, it had declined around 4.7%, and in March so far, it is down more than 5%. And from 2025 highs, if you look at the Brent crude price, it is down nearly 17%. So, what are the reasons that have led to this fall in the Brent crude prices? Firstly, it was the rising dollar index. That was one of the reasons. Apart from that, Trump tariffs have increased the global uncertainty, which has also put pressure on crude prices. And the third and one of the most important reason is the fact that OPEC is looking to increase its production from April 2025 amid a slowing demand. So that has also put pressure on crude oil prices. So how India benefits because of this lower crude oil prices? India benefits because nearly 85% of our energy requirement is met through imports, and hence a lower crude oil prices definitely is positive for India. But if you look at over the period of time, India's oil intensity has actually come down. When India had crossed the $1 trillion GDP mark, it used to import nearly 900 million barrels of oil, which was nearly 8% of the GDP. And now when we are at about 3.5 trillion GDP, we import around 1.7 billion barrels of oil, which is just 4% of the GDP. However, when it comes to inflation, fuel has a direct weight of around 4.4 percentage points in CPI, while it has a higher weightage of around 7.95 percentage points in WPI, and a 10% decrease in crude oil prices leads to a reduction in the headline CPI and WPI by nearly 40 to 80 basis points. When it comes to current account deficit, oil accounts for around 26.5% of the total imports and 61% of the commodity imports, and a 10% decrease in crude oil prices lowers or narrows the current account deficit by around 30 basis points. When it comes to growth, generally falling oil prices is likely to have a favorable impact on domestic growth through lower inflation, better financial conditions and robust business sentiment. So overall, India stands to benefit given the fact that we import nearly 85% of our crude requirements.
Okay, so that's the overarching picture and the bird's eye view. Let's drill deeper, Somit. No pun intended on the oil sector, of course, but let's talk about the individual stocks that could benefit here.
Well, yes, if you talk about sectors and stocks that could stand to benefit because of lower crude oil prices, firstly is the oil marketing companies. Now, overall, the impact could be neutral given the fact that oil marketing companies maintain an oil inventory, and if crude oil prices drop sharply, then there could be huge inventory losses. But Street obviously takes it positively given the fact that a lower crude oil prices leads to higher marketing margin for the oil marketing companies that they earn on selling every liter of petrol and diesel. And generally, a 0.5 rupees increase in the marketing margin of petrol and diesel increases IOCL, BPCL and HPCL's EBITDA by anywhere between 8 to 11%. When it comes to paint companies, it's positive nearly because 40% of the raw material cost is oil and oil derivatives. For aviation, also nearly 40% of the raw material cost is related to crude oil prices because fuel is the major cost for them. For lubricant manufacturers, nearly 50% of the raw material cost is crude oil linked, and a lower crude oil prices would definitely lead to lower raw material cost for them. Obviously, there will be a lag effect for all of these sectors. Even for tire sector, it is positive because synthetic rubber, carbon black and other chemical prices are derived from oil prices, and these chemicals form nearly 40% of the total raw material basket for any tire company. For cement companies, it's positive because nearly 40 to 50% of their total cost is either directly or indirectly related to crude oil prices, and a reduction in crude oil prices would lead to margin benefits for them. For specialty chemicals, a host of specialty chemicals stand to benefit given the fact that crude oil is one of the key raw materials, or crude oil derivative is one of the key raw materials for them. But when it comes to oil explorers like ONGC, Oil India, Vedanta and HOEC, it is negative given the fact that crude is the main product and lower crude oil prices means lower realizations. The major downside would be for ONGC and Oil India given the fact that a $5 per barrel drop in Brent crude leads to lower EPS by ONGC for around 7% and for Oil India by around 12%. However, do remember this is the most important fact to actually realize the benefit of lower crude oil prices need to sustain at these levels. Just short-term fluctuations won't lead to any positive or negative impact on any of these sectors on companies.
Okay. Point well noted. Somit, thanks so much for filling us in on the details. And now viewers, if you see the last half an hour, there is enough opinion out there on what could happen to oil marketing companies at the very least, on banks and a few more as well. I wonder though, just before we take that break, if Interglobe or SpiceJet are the others in focus. Remember Plutus, Arpit Khandelwal's Plutus broking or Plutus Wealth bought into SpiceJet 2 days ago, quite a large quantity, so that is interesting. But Interglobe as well, with all that the brokerages have said, plus the Mahakumbh effect and lower oil prices, does this become good? So Nilesh, of course, has a buy there. Nirav Ashar, Interglobe / SpiceJet, if not an investment play, is it a trading play? Are they a trading play?
Yes, they are a trading play, and I think as we had discussed in the previous show also that there's been a marked increase in the traffic flow, the airport-related infrastructure. We have new airports which are coming up, which are going to be inaugurated very soon. Air traffic intensity has been going up, so I think the going seems to be quite good. The sentiment is positive, and this should definitely aid the trading sentiment at least.
Okay, point well noted. And remember, viewers, there is actually, Nilesh, very quickly, 20-second answer. I know you long Interglobe. What about the charts for SpiceJet?
Well, SpiceJet is comparatively not looking that attractive, better to avoid, although there could be a possibility of a follow-up move towards 33 to 35, but the confidence is coming in Indigo.
So, you mean 53 to 55?
Yeah, 53 to 55, right.
Okay, fair call. Great, Nilesh. Leave it at that.
He's just checking if you're listening.
maybe he's checking. भाई मैं बोल रहा हूँ आप सुन भी रहे हो कि नहीं? Nilesh, thank you so much for joining in today. Have a good day. Nirav, stay on. More to talk about. We need to slip into a quick break. Back with the pre-open rate.